paid them, good. You got to pay Caesar. That's what Jesus said, pay. Okay, and then what? Then you pay you, okay? And then you live on the oyster.
You can zoom from here. If you can
Uh,
share anything.
the business, the money's coming in, it's just running the name. Okay? I'm not keeping that for me to live on. I'm keeping that for the business to live on. Feed the business, feed the beast. How many of you read the book, BSS to Reality?
I'll
It
just
says,
hold it
feed the
closer.
beast. That's the beast. Feed the beast. Feed the advertising. Feed the marketing. Okay? And what happens is you end up broke. You can't live down here. So what do you have to do? You can't live on this. What do you have to do? You got to either lower your spend.
So, good evening, everyone. Is my voice loud and clear? Manageable. Mhm. Awesome. Okay, good evening, everyone. So we are slowly, we're going to be starting shortly. So we're just waiting for more people to join the class so that we can get started. Everything is good from there, man. So I don't know the Wi-Fi. Okay, bring the mouse.
remember when I couldn't think.
Okay.
Every super successful person that I've studied talks about 100-hour, 140-hour work weeks, 1,000-hour work weeks, burning late. Bill Gates talking about, I would grab something to eat, I would fall asleep, and I would write code.
Yeah, of course.
And that's all I did. I ate and I wrote
Yes.
code. And if I couldn't write code, I would.
Master. So good evening, everyone. I hope we are doing fine. We are about to get started. Let me see whether there's any other. Okay, so please let me. If my voice is loud and clear, if you can hear me very well, let me know on the. If my voice is loud enough, please let me know. Okay, someone said loud and clear. Any other person? Any other person? If you can hear me very well, let me know. Where's the note? Okay, so someone said very loud. Okay. All right, so let's get started. Good. So if you sorry, I'm connecting to both audience, online, offline. So if you're yet to download the handbook for the class, please go ahead and do that on the Telegram. I just dropped the link on the Telegram to download the handbook. So in case you need it, and of course you need it. So I'll drop the Telegram link here so that everyone can also join. If you're not on the Telegram link, so that you can join and get the handbook as soon as possible. So let's get started. So close this door a little bit. So good evening, everyone. Thank you so much for being a part of the class. Thank you for coming around. So this class is going to be, it's a 2 days class, and we'll be discussing a very obvious subject, Forex. So this is a topic that I got introduced to just like every other person. Some of you might be your first time, some it might be your second time, so it might be you've heard it over and over again, but it always feels like is a long or is a very high mountain to climb. But the truth is, by the time you get to start learning forex, and by the time you go deeper into forex, you find out that there's really nothing. It's not rocket science. There's nothing. There's nothing too big about this subject called forex. This is same thing has made me very good money. It has made me quite comfortable. And this is also something that has helped me to learn a lot of things, a whole lot of things. One of the things about forex market is the fact that you don't just make money. The forex market has a way of changing you, has a way of teaching you things, revealing you to you. Because some of you might feel like, okay, I'm not a greedy person. I'm not a selfish person. I'm not an impatient person until you start trading the forex market. Bible says that where the treasure of a man is, that's where his heart will be. That's when you find out how connected, how close money is to your heart. Some of you will not know that until you start trading the forex market. So it's a very amazing This is a very amazing field. So in about 1 hour or maybe 2 hours, we have 25 people joining online. Wow. Somebody is saying the camera is not clear. The camera is clear. It's your phone that is not clear. So please, you can increase the setting, change your settings, put it on 720p. It is very clear on my end here, okay? It's really clear. So, and I hope my mic is also clear. So we'll get started immediately. Now, let me start first of all by saying this. Let me share my story first of all, for you to know how far I've actually come and some of the things that influenced my decision for going into trading full time. I was on campus somewhere in 300 level, thereabout. So we're on holiday, so I was in my sister's place, and I saw an advert on Facebook. I was just scrolling through Facebook because I needed at the time. I knew that I wasn't going to practice full time. I knew that physical therapy and working in the hospital is just not my kind of thing. Not. I'm too emotional. I don't like. I'm an emotional person, and I don't like. I don't just like being around sick people. That kind of thing. So I just knew that this thing is not for me. So I was just looking for opportunities online, and lo and behold, I came into I burst into an advert that was saying they are going to come and teach us forex in Onitsha. So I was like, well, I have time. What am I doing? So I decided to go. So I went there for the first day, and after the training, in fact, from the start of the training, they started, just showed us some things, shared some charts, shared some things. So I just knew somehow deep inside that I just love this thing. It resonated with my spirit. I knew beyond every reasonable doubt that number one, I have what it takes to learn this thing. It was looking quite difficult at the time, but I knew that this thing, I mean, it makes sense to me. It just made sense to me. So all through the night, I didn't sleep all through the night. I watched videos from that evening as I went back from the program till the next morning. I watched YouTube videos after YouTube. He recommended one video to watch, but after watching that one, I watched many other videos because I wanted to really just get to the zenith of forex, and that was how my journey started. Then a lot of learning process and all of that. But here we are. Forex has afforded me a lot of amazing, amazing privileges. Forex has afforded me some form of lifestyle that some people might feel that it's really a good lifestyle. I feel it's a good lifestyle myself. But however, it has actually made me good money. That's what I'm trying to say. So I'll be teaching you every single thing you need to know about the forex market, and I'll share with you um, one amazing strategy. This is a free class. We have a paid class which is next week, which would just buttress a little bit more. But however, what we give you here in the free class is enough to get you started and is enough to get you trading. Okay, so let's start off. So forex is simply a product of two words. My writing is very bad, though, like very, very terrible, man. But you don't blame us. I mean, there are two sets of people that have every right to have a bad handwriting. One is medical student. So it's our right, crying out loud. So if you go to a medical school, your writing should be bad. That's a proof that you went to school. So foreign exchange. Foreign exchange is very simple. There are two words here. And if you understand these two words, you're already good to go. Foreign and exchange. Foreign simply means something that is not your own, is foreign. You understand? When somebody swallows, maybe takes in poison, they say it's a foreign body inside his stomach. You understand? So anytime you hear foreign, simply means that it is not your own. You understand? Foreign exchange means that you're exchanging that thing. You're exchanging something for something that is not your own. It is that simple. That's foreign exchange. And in this case, we're talking about currency, exchanging currencies. Now, most times when people hear forex market and financial market, they tend to always intermingle the both of them. Some assume that once somebody says, I'm trading the financial market. They assume that the person is saying, I'm trading Forex. But that's not really the case, okay? Forex is simply just one out of the many. How will I put this now? Okay, Forex is just one financial market. So Forex is just one under the umbrella term financial market. The financial market consists of let me define the financial market for you. Financial market is any market where securities, derivatives are traded. Okay? It is where commodities, things like that are traded. Any market where they are buying and selling, and you are not seeing tomato, you are not seeing vegetable, you are not seeing all those ones, it's under financial market. Anywhere securities, derivatives, commodities, currencies, this is under the financial market. For instance, Forex is just one. And it happens to be the biggest under the financial market. Forex market is currently a $7 trillion market. Now, what do I mean by $7 trillion market? What that simply means is that every single day, $7 trillion is exchanging hands between people from all over the world. Just imagine, just see this as a. Have you watched? What's the name of this movie? What's the name of that movie? Squid Game. You watch Squid Game. Okay, if you watch Squid Game, when they bet was, I think, was $356,000 or so. So, but there was this big bowl of cash. You understand? There's this big bowl of cash that they were doing the game for. You understand? So Forex market is, just assume, is a $7 trillion market floating. And every single day, people from all around the world are picking from this $7 trillion bag. Some people are donating, some people are taking. So somebody can go, come into the market today and he will collect $7 million. Another person somewhere might be collecting $300. Another person somewhere might be collecting $5,000. Now, somebody else somewhere might be donating $20,000. Another person somewhere is donating $3,000. And when I mean donating, I mean they are losing. You understand? But at the end of the day, the amount of money that exchange hands between this number of people in the Forex market is $7 trillion. You know what is $7 trillion? If every day in the Forex market you're making $20,000 every day, the market doesn't even know that you came. The market is not aware that you came. I mean, every single day you come, you are making $20,000. The market doesn't even know that you are here. So we're talking about $7 trillion. That's $7 trillion every day. So every new day, there's $7 trillion out to be made. So there's a lot of money. What I'm saying this is to let you know that there is a lot of money to be made in Forex. A lot of money that you can make trading the Forex market. I'm managing a particular account today and we've made $3,200 on that account. So on today, of course, there are some days where you donate to. You understand? There are some days that you donate $500. There are some days you donate 200. Some days you collect. You understand? But the whole aim is to make sure that you are collecting more than you're donating. But as for donating, you must donate. It's part of trading. Okay? So Forex market is just one. Now, there is also we also have the stock market. Of course, many of you should have heard of the stock market. How many of you have heard of the stock market? So please, if you're using the handbook, we're in module one now. Module one. We are in module one. Okay, so another type of market, of course, you know what stock. We're talking about, shares and all of that. Okay, so we have the commodities market. Commodities. This is under the financial market. So we're talking about oil. The other are saying we are trading crude oil. So we tell you we are trading sugar. We are trading coffee. Those things are traded on the financial market too. Okay, and of course we have the crypto market. The crypto market, cryptocurrency market is still under the financial market. So you've heard Bitcoin and the likes of them. Okay, those are under the crypto market. So forex market is just one piece of the cake under financial market. It's that simple. That simple. Please, if you're following online, let me know. Let me be sure that you are following. If you're following online, please let me know that you are following. Okay? I just pinned the link to the Telegram channel just in case you need to download the handbook. Okay, please go ahead and download it so you can follow. We are currently in module one and we're moving to module two right away. Okay, so that's it. Now, let's move fully into forex because that's where our attention is. Okay, we're not here to learn how to trade stocks or crypto. We're here to learn how to trade forex. But the good news about forex is that if you learn how to trade forex, you've actually learned, in reality, you've actually learned how to trade every other thing here. Because if you learn how to do analysis, if you learn what, especially if you're good in, I'll teach you what fundamental analysis means anyway. But if you're good in predicting what happens to the price of a currency and what happens to the economy of a currency, how to interpret their economic data and all of that, you definitely learn what moves all of these other things. Now, let's go. So, I already mentioned that Forex means foreign exchange. Now, how is money made on the Forex market? Now, for instance, if I travel now to the US, before you travel to the US, you have to buy dollar. Of course, is that correct? Because you won't spend naira there. Okay, so you look for one aboki and buy dollar. So let's assume now I'm traveling now. The current price of dollar, let's assume is 750. It should be around 740, 720 thereabout, but let's assume it's 750 round price. So I bought $1,000 worth. I bought with naira. That means I paid 750,000 naira to buy $1,000. Okay, and I traveled. I got down to the US, and from the airport, I met a friend, an old friend that I've not met for a long time, maybe from nursery or primary school. So this friend told me, wow, you're in the US. What happened? I said, okay, I came for holiday. He said, don't worry, come and stay in my house. And I followed him to his house. He takes care of me, pays my transport. I have 5 days to spend. During those 5 days, he was driving me around. We go to shopping. He decides to pay for me. And all through my 5 days of stay, even the hotel I stayed, he decides to pay too. All through my stay there, he took care of my expenses. So I ended up not spending a single dollar from my $1,000. Now, assuming I now come back to Nigeria and the price of naira now is currently 800 naira per dollar. And I change my money back to naira, which now is 800,000 naira. How much have I made? Eh? 50,000 naira, correct. So I made 50,000 naira simply by holding my 1,000 naira note, not spending it, and coming back, the exchange rate has changed. and I change back my money. Is that simple? Is that not simple enough? That's just a simple principle of how money is made in forex. In forex, you're trying to you're trying to um, you're trying to hold on to the price of a currency, hoping that that price goes up or it comes down. Because in forex, you can make money in both directions, and I'll explain how shortly. Okay, are we good? Good. So it's actually just that simple, making money from the forex market. Now, I won't talk about the history of forex market. It's not necessary at this time. Okay, now let's talk about the difference between trading and investment, because a lot of people also, this is just introductory part. Now, a lot of people also assume that um, that trading is the same thing as investment. Someone will tell you, I invested money in forex. Have you met those kind of people that maybe you are trying to introduce them to maybe trading forex or maybe any forex product, something like that? They'll tell you that, do you know how much I invested in forex and it crashed? They will tell you, do you know how much I invested in forex and it crashed? The truth is, they don't know what they are saying. That's one. Number two, they don't know the difference between trading and investment. As an investor, when you buy an asset, you're hoping that the only way you make money from that asset is if the price of that asset goes up. Is that correct? That's the only way you make money. The only place you can actually invest money in the financial market is actually in stocks or in crypto. That's if you're not doing spot trading. Because when you invest in, maybe you bought a cryptocurrency hoping that the price goes up. So the only way you make money from investment is if the price goes up. But as a trader, you can make money whether it goes up or whether it comes down. That's the difference between being a trader and an investor. So when people say, most times when people say, I invested into the forex market, they actually mean that they traded, but they did not make money and they lost money. You understand it now? That simple? Is that simple enough? Fantastic. Now let's talk about the market trading session. So we are model 3 now. For those using the handbook, we're model 3. Now let's talk about market sessions. Now this is where we are getting a little bit a little bit deeper now. Okay, there's something called market sessions. For instance, for example, now here in Abuja, there are different markets. Okay, we have Otako market, we have Wuse market, we have Zone 3 market, we have maybe Gwagwalada market, just different markets. Okay, and but the thing is, for instance, if I specifically want to get foodstuff, foodstuff, I will not waste all the time and energy going to, let's say, Wuse market. Because in Wuse market, what you normally get there, clothes, shoes, bags, gold. You understand? It's not really a market that is dedicated to foodstuff. Now, in the forex market, there are 4 different market sessions. There are 4 of them. And the 4 of them have their own trading time, have their own different trading times. Now, number 1, we have the Sydney session. Number 2, I will explain how all of this works. The Tokyo session. We have the London session. And we have the New York session. Now, There is something spectacular. Let me tell you what is spectacular about this market. Now, for instance, the Sydney market is Asia, okay? It's Asian market. As you can see, this is world map, okay? So this is somewhere out around here. This is, where Sydney, Tokyo, and all of that. This is United States. This is London, somewhere around this zone. Okay, good. So Sydney session is usually the very first market to open. The Sydney market opens in Nigerian time. This is 10 p.m. 22 GMT. It opens by 10 p.m. It's the first market to open every single day. The market trades 24 hours out of the 5 working days, 24 over 5. Okay? Monday to Friday, the market is open round the clock. It doesn't close even at midnight. And you'll find out why shortly. The reason is that by midnight, when you're sleeping in Nigerian time, which is 10 p.m., the Sydney market opens. The Sydney market runs from 22 GMT to 6 o'clock, 6 a.m. That's Nigerian time. Oh, is this thing zoomed so that? Okay, good. So opens and this is when it closes 6 p.m., 6 a.m. GMT. Okay. Now, at the same time where the Sydney market is opened, the Tokyo market opens at 12 midnight. This one opens 10 p.m. This one opens 12 midnight, which is 24 GMT. Okay? And it also runs 8 hours. All the markets run 8 hours straight. 8-hour market. Now, 8 hours, yes. Each market is 9 hours, not 8, sorry, because the first hour is counted and the last 2. So it's actually 9 hours. It's just like your normal working time. You wake up, you go to work by 8. When do you close? 5. How many hours? 9 hours. It's not 8. 9 hours, correct? 9 hours. Each of these market sessions is 9 hours daily. 9 hours daily. But they keep running around the clock. Now, this one closes by 8 a.m. Okay? Now, at the same time this one is closing, this one is opening. As the Tokyo session is closing 8 a.m., 8 GMT, the London session is opening at the same time. And the London session will run from now because we share the same time zone with London, with those in UK. Okay, so the London session runs from 8 o'clock to 4 p.m. 4 p.m. GMT. Now, before this one now closes, before the London session closes, the US session is opening by 1 p.m. This one is closing by 4 p.m., but US session opens by 1 p.m. Opens, runs from 1 p.m. Sometimes, because depending on their season, sometimes this 1 p.m. can be 2 p.m. Sometimes it can be 3 p.m. because of fall season towards, because currently now the market is closing by 4 p.m. That's the UK session. But sometimes it closes 3 p.m. But however, just use this as the standard, okay? Now, it opens by 1 p.m., then closes by 9 p.m. Okay? Now, there is something spectacular about these 4 market sessions. And I'll tell you what is spectacular. Because the truth is, just like every other market, I gave you an instance using different markets here in Abuja. There are different types of market. The truth is, if you want to buy something like, what is common? What can we say we can get commonly in every single market? Let's say charger, phone charger. It doesn't matter the market you go to. It doesn't matter the market you go to. You can buy a phone charger. Whether it's a market they are selling fish, you must see one Aboki man there with his stand. You understand? Now, the truth is, every single currency pair can be bought or sold, can be traded on any of these sessions. Every single currency pair can be traded in all these market sessions. That brings us to what are now the currency pairs that are traded. Now, there are many. In fact, every single country, of course, have their own currency. Okay, and most of the currencies of the world are all on the forex market. But however, there's something called major currencies and their minor currencies. Now, there are some currencies, there are 8 currencies that are the most popular and the most traded in the forex market. Okay? We have number 1 is the euro, of course. The euro. How many of you know euro? Okay? Number 2, we have the GBP, which is the Great British Pound. Okay? Number 3, we have the CAD, which is the Canadian dollar. Okay? Number 4, we have the USD, which is the US dollar. Number 5 is the NZD, which is New Zealand dollar. Okay? Number 6, we have CHF, which is the Switzerland franc, the franc, whatever the pronunciation is. Okay? So number 7, we have the JPY, which is the Japanese yen. And finally, we have the AUD, which is the Australian dollar. Okay? Now, these are the major currencies traded on the forex market. Now, there are many other currencies, including the Nigerian naira. The Nigerian naira is also on the forex market. The South African rand is also on the forex market. Okay, so all these currencies are all on the forex market. But however, these are the most popular currencies traded and the most traded currencies on the forex market. Okay, now let's go. Here is another. Now we've studied and we found out the currencies traded on the forex market. Now the next thing is how is money being made trading these currencies? I think that should be the next question. Now, and trust me, there's nothing hard about it. Okay, there's nothing hard about it. Currencies are traded in what we call pairs. Currencies are traded in what we call pairs, currency pairs. Okay, and when you hear a pair, it means like 2, of course. When you're trading a currency, you're hoping that the price of that currency against another currency either goes up or comes down. Remember the illustration I gave you about traveling to the US. The reason why I was able to make 50,000 naira in 5 days was because the price of one currency, which is the naira, dropped against the USD. You understand? So a currency must always be exchanged with another currency for us to say that we have made money. Is that correct? So currency pairs are simply okay, somebody said, I love your statement. There's nothing hard about Forex. Okay. I love it too. So currency pairs, for example, let me give you one currency pair, for example. But let me not go far. Let's use the USD and the Nigerian naira. USD NGN. Now, this is an example of a currency pair. example of currency pair. This is an example of a currency pair, USD NGN. Okay? And for instance, now, let me check the current price of USD NGN. Let me check the very accurate price. So we'll work. I don't understand why people are laughing. I don't understand why people are laughing. How come I'm not seeing it in my broker? And my broker is in Nigeria, is not offering USD NGN. What have we done to ourselves in Nigeria? What have we done to ourselves in Nigeria? Good. So, okay, good. Hmm, Nigerian chart. So the current price, from what I can see here, of USD NGN is currently 455.0 um, 0612. That's the current price as listed on the forex market currently. This current USD NGN price. Now, how this price is gotten is very simple. 1 USD equal to 455.0612 naira. Now, let me give you another example of another pair. Then I'll link it up with this one. Now, there's another currency called the euro and the euro USD. This is another currency pair. The current price of euro USD is 1.0833. What this simply means is that for every 1 euro, you typically need 1.0833 USD. Simple enough. Simple enough. Wait, let me check my people on. Okay, so I hope everyone on YouTube, everyone join us online. We are all following. Okay. Now, this is simply the price. This is the price. This is the price. Now, seeing this alone, this tells you that typically, every single currency pair you see has two currencies. The what we call a base currency and a quote currency. A base currency and a quote currency. Let me check which module that we are currently on so that okay, we're still in module 2. Are we? Yes, so we're still in module 2 for those using the handbook. So you can follow up with the handbook. Okay, so We have a base currency and the quote currency. The base currency is actually the main currency pair here. It's the main currency pair that you're actually dealing with. The quote currency, which is this second one, NGN here in this case and USD in this case, is simply the quote is the currency that you're using to compare this other currency. So this one, when something said is base simply means that this is the person's foundation. This is the main thing that is holding this quote. So a base currency is the measure, is the main currency that we're actually dealing with. You understand? But for us to actually make money out of this, it must be in comparison with another currency, which now becomes the quote currency. I hope it's that simple, okay? Now, there are different, there are classifications of currencies depending on how they are traded and how popular they are on the forex market. We have what we call major currencies, currency pairs. We have the major, we have the minor, we have exotic pairs. Now, explaining this is very simple. Major currencies are any currency that has the US dollar. Every single currency that has the US dollar attached to it is a major currency. So currency pairs like USD, JPY, major currency. USD CAD, major currency. USD CHF, this is a major currency. GBP USD, major currency. So every single currency that has USD on it is usually called a major currency pair. Now we have minor currencies. Some of this, this is just a theory part. So you don't need to cram these things I'm saying. You understand? But it's good to take note of it, to know it. Okay? But it doesn't call for cramming. Okay? Now, minor pairs are pairs that do not include the USD, but has at least one out of the other most traded currencies, which are the JPY, the GBP, and the Euro. So currencies like the Euro card, currencies like the AUD, NZD, currencies like the GBP card. These are all minor currencies. Okay? Now, there's minor currency pairs. Now, when I say currencies and currency pair, there are two different things. So take note. When I mean currency pair, I mean pair like this. When I mean currency, I mean just one, stand alone on their own. Okay? So now these are examples of exotic pairs are pairs that merge major currencies with currencies from other developing countries like Nigeria. So currencies like USD, NGN, exotic pair. USD, South African Rand, exotic pair. USD, SGD, Singapore dollar, is also an exotic pair. Okay? Now, well, we'll get to the difference between all these things. But however, what you need to know is you can make money, good money, trading any of this. You can make good money trading, whether you're trading major pair, minor pair, exotic pair, any pair. You can make money from it. Easy peasy. Okay? Now, let's move ahead. So any questions so far? Any question, whether online, offline, any question? Because we're going into keywords and terminologies. So if you have any question, please go ahead and ask. Go ahead. No, just focus on. Okay. Okay. Yes. Yes. All the markets trade Monday to Friday. Every single market. They keep overlapping themselves like that Monday to Friday. Okay. So, any questions from from those following us online? We want to move into keywords and terminologies because some of these terms you need to just have them at the back of your mind, just so you understand. So, any questions so far? While we're waiting for the question, let's go ahead. So, this is the most obvious. You've heard I'm buying, I'm selling. We've all heard about buying and selling. One telling me I'm buying, one will tell you I'm selling. Okay, sorry, before we go into, someone has a question. Says, what is the difference between quote and base currency? I actually explained this much simply, but let's do that again. Base currency is simply the currency, is the main currency you're dealing with. But of course, you can't, for instance, let's use this. Let's use this now. Let me use this as an example. USD card. USD card as an example. If I'm saying, if I want to do anything with USD card, whether I'm buying it or whether I'm selling it, this is the main one. This is where my attention is actually on this USD. But however, I can't exchange USD with USD to make money. You understand? I must exchange that USD with either Canadian dollar, Australian dollar, or whatever currency. So for you to make, for simpler understanding, you can simply say that the base currency is simply the currency that you have and you're willing to trade. You can, is that? No, it's the one you have that you're willing to trade with another currency. For easy understanding, okay? For you to understand it. Okay, just put it that way in your head. It makes understanding it much more easy. Okay. So when you hear base currency, just means base. This is the currency I'm starting with. You understand? So I hope that question is actually answered. So buying and sell is a terminology that, of course, you hear a lot in the forex market. Now let's go. For instance, if the USD card price is, let's say, 1.3520, what does this mean? If we want to spread, because in mathematics, I using they say expand. They will tell you, they will give you something like this: x squared minus 3 2y 03. They will tell you expand. There's no question that was more scary in mathematics than this expand. This is one of the most difficult things to do in mathematics. So if you want to say, let's expand this now, let us expand. Expanding this simply means that 1 USD is equal to 1.3520 CAD. So the person asking question about quote currency, you can actually say that the base currency is the one that is 1 equal to whatever other one. You understand it now? So the base currency is the one that you're using to compare any other one. This one base currency is equal to whatever other quote currency has to offer. You understand? Okay? So that's simple. When we say we want to buy USD card, we are simply hoping that this number here would increase. If we say let us sell USD card, we are hoping that the value, this value you're seeing here, actually goes down. Now, there are two ways. There are two ways this value can go down. There are two things that can make this value to go up. How many of you agree with me? Let me show you now. This is 1 USD, okay, equal to 1.3520. Is this thing zoomed in enough so that people online can see it? Okay, 1 USD, 1 USD equal to 1.3520. Now, there are two things. Let me put card here. There are two things that can make this this figure here to change. It is either that the value of USD goes up or down. If the value of USD, that means the worth, let's use the worth, if the worth of USD goes down, what happens to this price? If the worth of USD will it increase this value or will it reduce this value? For those online, if you're following, please let's have your own answer too. Now, here is the question. The question is very simple. What can make this value here to change? That's the question. What can make the value to change? And I said there are two things that can make it change. Either the value of this thing change, the value of USD changes, or the value of card changes, whether up or down. So we are now saying if the worth of US dollar decreases, what will happen to this value? Eh? There's no how it can increase. If the worth of USD goes down, if the worth of USD goes down, this value here will fall. No, not because it's the base currency. Okay, okay, how will I do this now for easy understanding? Okay, let's do this. Let's say USD is 1. Card is 1.3520. I hope this is my mathematics. Sorry, I think I'm misplacing it. Let's do card. Card is equal to 1.135, sorry, 1.3520, and USD is equal to 1. This is typically 1 divided, over this thing will still give us 1.3520. Is that correct? Is that correct? It's correct. Now, assuming that USD now becomes 1.3520, that's for card, and USD is now, let's say, 0.3. Wait, is this my mathematics correct? But do this mathematics, let me see what you get first. Press your calculator, let me see what you get. Let me be sure that this my mathematics is correct. Because I'm looking for a better way, an easier way to actually explain it for you to understand. It's 4 point something. No, that means the calculation I'm trying to do is not correct. It's not correct. But let me find an easier way to explain it. Let me find an easier way to explain it. Let's say now that euro, okay? Let's be using that USD card. Let's assume USD card is 4 and uh, card is 2. 4 over 2, we have 2. Correct. Okay? Now, if this value, if the value of USD changes from 4 to, let's say, USD 3 and card equal to 2, what happens? What's the new value? 1.5. Are you understand what I'm trying to explain now? No, that's the value of USD card. USD, both of them. Both of them. Because you can't trade currency in isolation. It must be traded against another currency. You understand it? So if anything changes in the value of any of them, the price changes. The price changes. You've heard them maybe giving news. They'll tell you that due to the inflation in the United States, that the Great British Pound gains over the US dollar. What that simply means is that the price of GBP, which is Great British Pound, is going up and the price of USD is going down. So when you hear statement like that, that simply means that the GBP USD, the price is going up. When they tell you that the GBP is gains over the dollar, it means that this price is going up. But if they tell you that the USD is gaining over the pound, it simply means that this value is going down. Understood now? If someone is saying, can I see this video later? Yes, you should be able to see it later. Then somebody said, can major pair come opposite of USD? For example, GBP USD instead of USD GBP. This your question is a little bit skewed. I don't really understand. But however, if what you're asking is whether we can have a currency pair like USD GBP, that's not possible. That's not possible. It is always called GBP USD. That's the globally recognized value. Okay, is USD GBP USD. Okay, it cannot be USD GBP. Okay. MT4 and there the analysis, the card value increases. Okay, so no questions so far. So that's just what it simply means. So in summary, when somebody says I want to buy, you're just hoping that the price of a currency pair goes up. When the person is saying I want to sell, means that you're hoping that the price goes down. Okay, so sometimes when you try to start doing the mathematics inside, it will confuse you. Just know if this is the value of USD CHF 1.3129. If we are buying, what are we looking for? We just want this value to go up. Buy. Sell. If we are selling, we are hoping that this value falls. So it's not really your business to know whether this one is the one losing or not, or whether is this one that the value is going up or not. You're buying and you're selling, or this is where your attention is. You're hoping that the value of this goes up or goes down. Okay, it's that simple. Now let's go ahead. Now long. I know you must have heard people saying we are going long. I'm long on GBP USD. I'm long on Euro USD. Long is just another term for buy. Don't I say I'm shorting? I'm shorting USD. I'm shorting Euro USD. I'm shorting USD CHF. Is simply sell. Now there's also a term called bulls and the bears. When you say bullish market, bearish market. Okay, bullish market simply means that the market is on an uptrend, is going up. The reason it's called bulls is because if you watched all this their race, oh sorry, that's a race, all this thing that they used to do, play with bulls. Somebody will just come with handkerchief, the bull will run and pass. I mean, if you've not seen that kind of sport. So when you look at bulls, when bulls want to attack you, they hit you up. They are trying to use their horn to launch you into the air. You understand? So that term in Forex simply means buyers, because buyers are looking to come into the market and launch the price up. Okay? But when a bear is attacking you, what the bear is looking to do is to grab you, push you down into the ground, and grab you and tear you into pieces there. You understand? So bulls are pushing price or bears are pushing it down. So very simple term. These are buyers, these are sellers. That's yeah. Okay? Is that okay? Fantastic. So now there's something called trend. If you might have heard in Forex, follow the trend, trend. Trend simply means the direction that the market is going. Is it going up or is it going down? If it's going up, it is called an uptrend. If it's going down, it is called a downtrend. For those following us online, if you have a question, please go ahead and ask on the chat. If you have question, then we have a ranging market and consolidation market. Now, this is a market that the market is not going up, it's not going down, it's just going sideways. You can say it's a ranging market or it's consolidating. Okay, that's simple. Now, there's something called a broker. Now, a broker is because when I was trying to explain the forex market to you, I told you that it's a pool of money, the pool of $7 trillion that is moving around every single day. But the truth is, for you to reach out and grab your own share of that market, you can't come as an individual person. You can't come as a single person. My name is Joseph, and I'm coming to take $20,000 from the market. You don't have that kind of authority. That authority is not given to you. You don't have that kind of authority. So you need a kind of company called brokers. Brokers are like forex bankers. Just see them as banks in the forex market. They are your intermediary between you and the forex market. So for you to participate in the forex market, you need to go through a broker. You understand? You must be registered with a broker, and there are many brokers out there. But we have, and a lot of brokers also, you should know, are very uh, unscrupulous. You understand? There are a lot of brokers that are really, and they scam people a lot and all of that. So there are some that we recommend. There is one I recommend. I would maybe at the end of the class I'll recommend them to you too. Okay? So that's it for brokers. So brokers, the way they help you to trade is that they offer you something called leverage. Before, sometime 20 years, 30 years ago, thereabout. Is it up to 20? Okay, let's, 20, 15, 20 years ago, before you can participate in the forex market, there is an amount of money you must have. I think then is I can't remember either. I can't remember. I really can't remember, and I can't even guess. But let's just assume the minimum you could have then is like $1 million for you to participate in trading. So brokers came in and they offer something called leverage. What leverage simply means is, for instance, they can offer a leverage, for example, they can offer a leverage like 1:200. What that simply means is that for every $1 you bring, they give you $200. Not like they give you, but in the market, they are representing your money, your $1 as $200. So if you have, let's say, $100 and they want to help you participate in the forex market, this your money is being represented in the market as 20000, which is $20,000. So what leverage does is simply it just gives you participation ability in the forex market for you to be able to participate in the forex market with very little money. Okay, now let's move ahead. We have about 25 people on online. Fantastic. Now, I hope everything we are doing here so far, this thing is clear. Clear, we are good to go. Now, there are there are types of traders. There are different types of traders in the forex market. And the reason why you need to understand that there are different types of traders is because, okay, go ahead. No. Not like they are not offering you that. The leverage is, it doesn't appear as your capital. You understand? If you put $100, your capital is $100. The leverage part is between them and the forex market. You understand? The leverage part is between them and the forex, but what you're trading is your own $100. I didn't really get the leverage concept. Okay. Let me try and explain it in a much more simpler way. Let me use a diagram. I think a diagram will be better. So this is you. This is you. You're a trader, okay? This is the trader. You're looking to trade the forex market, okay? Now, uh, let's say this is your height. You're like 4 feet. However, the forex market, which is this big institution here, this market right here is 8 feet. And this is where this is the main trading floor. This is where trading is happening. But unfortunately, we are too short to participate in this market. So somebody comes to help you, which is the broker. The broker happens to be a very bigger guy. Okay? So the guy wants to help you to participate in this market. So what you have is, let's say, $10. Okay, let's use $100. This is what you have, $100. But you can't participate here because you are not tall enough. So the broker comes, okay, give me this your $100. For every $1, I will give you $200. That's if you're using a leverage of 1:200. They are different leverages. Different brokers have different. Some can give you 1:2000. Some can give you 1:1000. It all depends on what the broker has to offer. So this guy currently is giving 1:200. Now, once you give him this 100 to trade, this $100, your capital is now $100. The leverage part is between him. And the forex market. In the market, he's presenting this your money right now with 1:200. He's presenting your money to this guy right here as $20,000, which is 100 times 200. Okay? The market is seeing your money as $20,000, but your money is 100. And if you're making money, what you're making is still under this 100, not this 20,000 here. You get it? The ratio is For instance, if in the market, your money is being paid at 20,000 and you make 10%, 10% of 20,000 is like 200. Correct? 200. What you are making in this side is $20. But yes, between the broker and the forex market, this is what they are seeing, but this is what you are making. If you make 20% here, it's 20% of your capital. Don't see this. These are theoretical aspects of trading. By the time you start trading full time, you don't even know all these things are. It's just for your own understanding, just for you to understand how leverage works. You get it. In your own trading, your business, you don't care what's there between them. Your own is your capital. Your own is your capital. And what is showing on your MetaTrader 4 platform, your trading platform, is $100. If you're losing between them, if you're losing minus, let's say you're losing minus $10,000 between them, what you're seeing on your own is like minus 1,000 is that's half of this, right? That means what you're seeing in your own end is minus $50. This leverage part is between them. Just okay. So I hope the person asking the leverage question, I hope it's clear. Just take note of your capital, okay? And the leverage part is just between the broker and the. Okay, so let's talk about types of traders. Let's talk about types of traders. Now, the reason why we need to discuss the types of traders is because you find out that both your temperament, your personality is tailored towards becoming a particular type of trader. Your temperament, the way you act, the way you do things, your normal lifestyle usually is geared towards becoming a particular type of trader. Now, there are three types of traders. Number one is what we call the scalpers, scalping. Scalpers are people who enter the market. They don't wish to stay long. They are not there to waste time. They just want this market to move. For instance, let's say this is the forex market, and the market has moved like this, like this, like this, like this, like this. Scalpers, for instance, and this is like maybe what is happening in a full week. This is like in a whole week. This is what happened on a particular price. Okay, scalpers don't have this time to wait from here to here. They just want this market to move from here to here, and they make money and go. They don't have time. They don't have the luxury of waiting till long. Just want in 10 pips, 20 pips. I'll come to explain what pips actually means shortly. They just want to collect small, sharp, sharp. They're out of the market. Now, it doesn't mean that they are making small money. It doesn't mean that they are making small money. Because from here to here, in fact, it's in Forex that you find out that they change from 1.3015. If this value becomes 1.3019, somebody can make $20 million just here. so so just so you know, so the fact they are scalpers does not mean that they are making less. It simply means they are spending less time in the market. Okay, that's their own style of trading. Now, the other side of people called the swing traders. These are people who stay much longer in the market. Okay, they can hold the trade. As you can see, for instance, this one entered a buy here, and it was still on the buy position till it got to this point. Okay, so these are they stay longer in the market. Now, these things you're seeing here are called swing. From here to here, one swing. From here to here, another swing. From here to here, another swing. From here to here, another swing. To this place, another swing, another swing, another swing, another swing. Okay? These are all different swings. So a typical swing trader is hoping to go from here to here. Then he'll probably exit the trade here, or maybe enter here and exit here. They just want to capture one swing in the market. And most times they stay longer in the market than scalpers. Okay? Okay? Depends on how much you are trading with. I don't know whether this statement is concerning the leverage, but however, the statement is correct. It depends on how much you're trading with. But let's continue. So there's day traders. Now, day traders are people who come, wake up in the morning and they are hoping to make profit within that day. They're hoping to open a trade and close a trade the same day. They don't want to, because you can open a trade and leave it for 1 week, provided it's on profit or maybe even on loss. Okay? So, but day traders are traders who want to open a trade and to close it that same day. They don't want to stay that long, open, close the same day they're out. Okay? Those are day traders. Understood? Now, for you, it now depends on you to find out which kind of trading style will suit you. When I started trading, first I transitioned between these three back and forth. There are some times where I started my trading journey as a scalper, because I felt like if this thing just moved like this, I've made $5. I was happy. and that one, maybe we'll talk about trading psychology tomorrow. But so when I learned how to trade, I asked a very spectacular question that day. I asked the guy, so because we opened the demo account, so I placed a trade. So in my eyes, when you open the demo, they give you like $10,000. So I placed the trade. In my eyes, the thing was going $200, $300. So I asked the guy, so if this thing was real money, I've made $300. He said yes. I said forget it. That's all I need to hear. It's enough. You have convinced me enough. You have convinced me enough. So just this small thing, this thing moved from here to here now. I've made $300. He said yes. I said that's good. So I started my trading journey as a scalper. So I'll just enter the trade. Once the thing turned blue, boop, boop, I just see $2. I close. So, but after a while, I found out that it's not a bed of roses. I found out that it was not as easy as I thought. Because another funny thing about trading is that after being a scalper, my journey was that then if it's going on profit, I'll be scared. Hey, let this thing not come back again. Let it not come down. Let it not come down. And with fear, I'll go and close it. And then maybe if I'm on a buy position, I'll close it, and the thing will now keep going up. I'll now be like, why didn't I leave it? Why didn't I leave it to keep going? But when it's going on loss, I'm like, don't worry, wait. It might recover. Before you know, you are losing more than you're making. So I shortly found out that this is a very emotional trading style, and I can't keep up. So I stopped scalping. I became more of a swing trader. Swing trader. I found out that I'm much more. In fact, this was the trading style that actually started making me money. When I started swinging, was when I started making money. Because then I was working in the hospital already. So somebody says it happens to every newbie. Yeah, see, the truth is every bank, everybody coming to forex market, you must collect your own fair share of shege. I mean, you must collect your own share of shege. It's just normal, okay? So, so it was swinging that actually started making me money, because then I was already working in a hospital. So at the end of the month, they paid us salary. We had like good. They were paying us about 135,000 as an intern every month. So I mean, I just finished university, so I was seeing money. So I wasn't under pressure. So I can just come to the chat, analyze, enter the trade and just forget it, and maybe come back on Friday, say, this is on profit too. So that was the trading style that actually started making me money. But I was trading less. My analysis was a bit more sharper. I wasn't under pressure for trading. So swinging, I started making money for trading. But time after time, time transition, I found out that, well, in as much as then I had finished internship, so I had more time. So there was no way I can just be trading just once or two times a week, because I don't have any other job and I don't plan on looking for any other job. So I'd rather be focused. So I found out that, okay, why not just open a trade and close it that same day? Look for only setups that will open and close that same day. And started day trading. So fast forward to today, I still do both of them. Once in a while, I still scalp. If I see good opportunity for scalping, I still scalp. But mostly, I do day trading and I do swing trading. Okay, most of my trades, I love to open and close it that same day. That's my own style of trading. Okay, so that explained. For those that are just joining us, we are using the Forex Bootcamp Handbook. You can download it from the Telegram channel using the link I pinned on the comment, so you can follow up. So now let's talk about types of market analysis. This is another amazing part that you need to understand very, very well. Types of market analysis. There are in fact, there are four different ways that people analyze the market. What that's because I had a seminar the other time. Somebody was asking me, is Forex trading not the same thing as gambling? It's not the same thing as gambling. And I gave her two reasons why it is not the same thing. Number one is the fact that if you can't call trading stocks, if you can't classify stock trading as gambling, then you can't say Forex is gambling. Because if you're buying into the shares of a company, let's say you're buying into Apple shares, anything can happen to Apple tomorrow. The owner can die, the what's it called? Their product ideas can become very terrible. Nobody wants to buy them. Or another company can come up with smarter ideas to make phones and beat them down. So you can't really, you're just betting on the hopes that, well, I know they've done well in the past. Their phones have been good. Their CEO looks like a very credible person. They have good ideas. Then you're betting that the price of their stock will go up and you bought shares from Apple, right? That's how it works. So in currencies, in currency trading, in Forex trading, it is basically the same thing. You're looking at what the price of a currency pair has done in the past, looking at the economy, the economic data, predicting what will likely happen on the price of a currency pair before you take a trade, which is totally different from what happens when you are maybe in a casino. You're trying to maybe do gamble with your money. You understand? It's a total bargain. Those are not different. They are not the same way at all. And the truth about gambling is that you can never win. The house always wins. If you're playing, whether it's roulette or what's this other one they do again, whatever it is, it's already rigged so that if you play it long term enough, you will lose. The house always wins. They have more chances to win than you. But in the forex market, you can give yourself 3 to 1 chance to win than the forex market. So that every single time you win, let's say you win 3 or 5, and every time you lose 1. But that kind of advantage, you can't give it to yourself when you're gambling. Okay? Now, the second instance I told her is that even Jesus Christ in the Bible told us that investment is a good thing. When Jesus Christ told the story of the man who gave his servants talents, he said he gave one 10, he gave one 5, he gave one 1. So the one that had his 1 talent went and hid the talent. And finally, when he gave it back to the master asked him that it should have been better if you went to deposit this money so that at the end of the whole thing, at least we have an interest in it. What is it called? Is that not trading? Is that not trading? So there are three types of analysis that people do in forex. Now let's start with number one. Number one is the technical analysis. The technical analysis simply means you're doing analysis based on market data. You're trying to analyze what price of a currency pair has done in the past, and you're trying to use the behavior of that currency pair in the past to predict what is likely to do next. You understand? When you do that kind of analysis, it is called technical analysis. Now, for instance, let me ABP. Okay. Now, this is a currency chart. And this is where the current price is. This is where the current price of this is now. This is where the current price is, right? If we decide to scroll, because the whole idea of trading is to predict whether is this thing going to keep going up or is it going to keep coming down, okay? If you scroll backwards, and try to analyze what has this kind of price been doing. When I see this and this and this, what next happens? Or if I see something like this, what next usually follows it? When you do that kind of analysis and try to figure out, okay, seeing this, it did this here, it also did something like this here, did something like this here, that means that it might do this like this here. You understand? That's typically what a technical analysis is. You're trying to predict what the price of a currency pair will do based on the historical data, based on what it has done in the past. That's technical analysis. Now, for fundamental analysis simply means you're using data from news events. Data from news events. You're trying to find out what is happening in the US economy, what's happening with inflation, what's happening with their interest rates, and what would be the effect on the currency pairs. I already told you a currency like, for instance, Euro USD. If the price, and let's say if the price is 1.2000, if the price of USD, or let's say if the worth of USD falls, what will happen to this value? What will happen to this value if the worth of USD falls? Hmm? Okay, somebody saying it will increase. What is it going to do? It increase. Marcel, what is it going to do? If the price of USD, that's only USD, not USD, Euro USD, if the price of USD, that's the worth of USD, is falling, what happens to the Euro USD pair? No, this is the price of Euro USD. So I'm now asking if only the price of USD. Yeah, let's say now that one USD, instead of being equal to 1.200, is now equal to 1. 1.1 800. No, I didn't say euro that euro will increase. I'm saying the quote, this whole thing, will it increase or decrease? Will increase. Base currency. Okay. Okay. What currency? Okay. Okay. Let me let me clarify it. This value right here will increase. No, no, no. The value will increase. Let me just give you a very simple analogy. Let's say Euro USD is equal to 1.200. This simply means that Euro, let me try and see whether I can use math and solve this. Euro is equal to, Euro is 1, then USD is equal to 1.200. Okay? Now, how many of you remember cross multiplication? Because that's the only way you can solve it. For you to understand, this is just theory, but you need to understand the theory. Okay? Now, if we do, now if we do cross multiplication, we have 1.200 euro is equal to 1 USD. Correct. Now, we are now assuming that the value of USD has fallen. We are now assuming that instead of 1.200 euro, we have 1.200 euro is now equals to, let's say, 0.9 USD. Correct? Now, let's expand it back to this thing so we can do cross multiplication. Of course, this is the only way we can do because we can't cross out this one and this one. Okay, let's expand it back. It simply means that 1 euro. Okay, hope this is my mathematics. No, we can even just divide it like that. We can just divide it like that instead of doing. So if we do euro USD, to get euro USD, divide 1.200 divided by 0.9. Let's see what you have. Divide by 1 point equals to 1.33. 333. So with the value of USD going down, did this value increase? Did this value increase or decrease? Eh? It increases. Good. So anything, if the value of only euro, let me put it in a way that will make it easy to understand. There are 4 ways that this thing can increase. Now, this is the value of euro USD. Okay? If the value of euro USD, if the value of euro, only euro, goes up, the value of euro USD, euro USD price increases. If the value of USD, sorry, if the value of USD falls, what happens to euro USD price also increases. Now, if the value of euro goes down, what will happen? If the value of only euro, okay, okay. No, you are not understanding. I'm talking about you. See, I told you that that currency is not the same as currency pair. What I mean by Euro USD here is the combined. This is Euro USD. This is Euro USD, not Euro. You get? So if nothing else changes in USD, but the value of Euro goes up, the value of Euro USD increases. But if only the value of USD went down, the value of Euro remains the same, the price also increases. Decreases. Yes. Let me write it out. Let me write it out. Finish first. This is just theory aspect. It shouldn't be taking us this much time, because in the real trading, you might not really even need. If the value of USD now goes up, Euro USD price also decreases. See, to do this mathematics, simple, very simple. Anywhere you see two currencies, even if it's, let's say, USD card, to know what happens to any of them, you can assume this one USD is 4, card is 2. Checking now. Assume inside your mind. So if card becomes 1, what happens? USD card is normally is equal to 2. If card becomes 1, 4, it has increased. If card becomes 5, which is now 4/5, what has happened? It will decrease. Okay, so I hope everyone is following. Even those of us online, please, if you're following so far, if there's any form of this misunderstanding, or if you have a question, please do well to ask if you have a question. So, but however, I hope this is clear enough. This is theory. Don't worry. By the time we enter practical, you might not even need to be doing all this calculation, because it's not your business what is moving all these things. Your own is that is this one increasing or decreasing? That's all. You understand? But however, it's good to know the theory. Okay. So that's it for fundamental analysis. Fundamental analysis is just you want to use news, what is happening in the market, what is the economy, and what is the inflation rate, the just economic data. You're using it to make the analysis. Now, sentimental analysis is simply making decisions just based on the data from behaviors in the market. Are there more sellers? Are more people prone to buy than sell? It's just a sentimental way of doing your analysis. Okay, that's it for sentimental analysis. Now there's discretionary trading, which is a category where I can say I actually fall. These are people that they are making use of any available information about a currency pair to make trading decisions. Okay, so they can combine three of them. They can combine technical with fundamentals with sentimental and make their trading decisions. Okay. Now, okay, types of trade execution. This is not really necessary. Let's waive it. You can do without it. Okay, I've already explained to you what brokers and market makers actually mean. I've already told you that brokers are your intermediary between you and the forex market. Okay. Now let's move to this is module 4. My God, I was hoping that we'll complete module 5 today before we go, but we'll stop at module 4 because I've noticed that some of us, our brain is beginning to shut down. So I know a lot of people, our brain is beginning to shut down already. So I would want to help you so that it doesn't shut down completely. Now, every currency, every what's it called? Every body of knowledge, okay, have what they call their terms for measurement. For instance, on a racing competition, if you're talking about track events, you hear things like 100 miles. You can run 100 miles per hour. You can run 20 kilometers per hour. These are all units of measurement, okay, as far as race is concerned. Now, in wrestling, you hear he's 255 pounds. He's weighing 65 kilograms. Those are all units of measurement that are specific to that particular field. And if, for instance, you go into sports, football, okay, they can tell you, there's this measurement they do. They can tell you the energy. I don't know how they put it. The energy on Ronaldo's leg. They can tell you the highest weight of shots that he can play. You understand? These are all just units of measurement that are specific to that particular body. Now, in Forex, we have two major units of measurement. Number one is the pip. The pip. Number two is lot size. These are the major units of measurement in Forex. And I'll explain what a pip actually means shortly. Now, pip in terms, if you want to define it, if you want to give it a definition, simply stands for price per interest point, okay, or percentage in profit, anyone you call it. It is simply this. If you look at the quote of a chart, let me show you something. Now, if you look at this side of this chart, you will see these numbers that just keep fluctuating. You see these numbers here that just keep fluctuating. Let me put this down. I don't know. Good. So, if you look at this, you see these values that just keep fluctuating. Like already talked, this is the currency price. This is the currency quote, okay? You have the Euro GBP, Euro USD. This is all their quotes, okay? Now, let's take Euro GBP, for example. The current price, as you can see, is 0.8754. Let's take Euro GBP. GBP price is 0.8754. This is the current price of Euro GBP. Okay? Now, if you look well, some brokers, for most brokers, you will see this last value. You can actually see that there are actually 5 values. 8754, then there's this 7 here. You know, there's this last value. Okay? The last value is usually called a pipette. So, but however, ignore it. Okay, it's called a pipette, but we don't usually factor it in calculation. It's not necessary when you're doing your calculation. So our interest is in this decimal value, this last four decimal values. Okay, now one pip, one pip, for instance, if this is one pip, if 0.8754, if we say that this value has moved one pip simply means, and it has moved one pip up, it has increased by one pip. We're simply saying that this value has increased from 0.8754 to 0.8755. So a pip is calculated this fourth decimal place here. This is the pip. This is the pip. So in reality, what we are saying is that in Forex, for this kind of decimal place currency, one pip is simply, one pip is equal to 0.0001. This is one pip. What is two pip? Two pip in Forex means 0.0002. This is two pip. Okay? Now, somebody who should come and give me an answer to this. If we say Euro USD has increased by let's the value, current value is 2.2348, and the value has increased by 59 pips. What is the new price? Oh, somebody should come and give me the new price. Come on, come on, come on. This is the current value of Euro USD. And we are saying that it has increased by 59 pips. What is the new price? Remember that one pip is 0.0001, two pip 0.002. Let me give more example. 25 pips is 0.0025. This is 25 pips. So add 59 pips to this. The new price. Give us the new price. Oh, that place equal to. Yeah. Yes. Oh, give us the new price here. Is that correct? Do you have something different? This is the zone. Do you have something? Add 59 pips to this. Eh? Okay, you're coming. Okay, good. So for those online, where is my phone? Okay, somebody has answered. Somebody said 1.2407. So what's your own answer? Eh? 1.2357. Okay, let me write your own. So 1.2357. Okay. What did you add? How many pips did you add? So 1.2407. Fantastic. So the answer is 1.2407. Is correct. Now, 59 pips is simply 0.0059. So we add this to 1.2348. What do you have? 1.2407. Correct? Now let's do another example then. Another example. Now that's the example. Let's assume, let me take a price from here. NZD USD 0.6454. NZD USD 1.6 0.6455, sorry, 0.6455. So this one now is classwork. Everybody will come and write. So plus 33 pips. Your own is plus 33 pips. You come and give us the answer. Minus 29 pips plus 29 pips, Marcel. So yes, your own is plus 15 pips. You come and give us the answer. So Joe, your own is minus 235 pips. Okay, so come and give us your own answer. Yes, add 33 pips to this. 0 point what? Yes, add to this. What do you have? 0.6488, correct. So what do you have, Marcel? Subtract 29 pips from this. Okay, let me add more example for those online. So I can see, so for some of you that are participating, Ernest, this is your own. Ernest, add 53 pips and let us know your answer. Jude subtracts 125 pips from this value here and let me know your answer. So, Marcel, 0.646426. That's correct. 0.6426. Correct. What did you subtract from? What's 29 pips? What is 29 pips in decimal? That's 29 pips. Good. So, Emmanuel, where are we? 15 pips to this. Yes. What do we have? Eh? No, 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 no. It can't be. It can't be. It can't be. Joe, any answer from your end? 0.6220. That's correct. 0.6220. That's correct. So, Ernest, I'm still waiting for your answer. Jude, I'm waiting for your answer. Any other person online? Okay. Okay, Jude said minus 125 pips, 633, 633. Okay, good. That's good. So, Jude, that's fantastic. 0.6330. That's it. So, who else are we waiting for? We're waiting for Emek. Is it, who did I give this other one? Emeka. Sorry, Ernest. Ernest, we're still waiting for your answer. So, what's your answer? 7 what? 0.6470. It's not a complicated thing to do at all. Okay? This is just what to take note of. Everyone, look here. Look this way. Look this way. Just look this way. 1 pip. Okay? 1 pip is equal to 0.0001. Simple. 2 pip, 0.0002. The fourth decimal place is your attention. 20 pips, 0.0020. 55 pips, 0.0055. 120 pips is equal to 0.0120. 1,000 pips. 1,000 pips was 0.1000. You understand? It's not a complicated thing to do. Okay? So anytime you hear that, let's say Euro USD increase 120 pips, just do 120 in decimal point, then add it to the number. Okay? Now, that's just the first part. Because there are two types of currency pairs you will see. There are currency pairs that have 4 decimal places. There are 4 decimal places, which is what we have done. Now, there are some that have 2 decimal places. There are some that have 2 decimal places. There are some that have 4. If you look here, see these ones. These ones that have JPY, like the Euro JPY, the GBP JPY, NZD JPY, they all have 2 decimal places, as you can see. 140.77, 160.76, 83.86, 129.85. So the question is, how do we now calculate these ones that have 2 decimal places? It is that simple. The same way we did this one. But for these ones with 2 decimal places, for instance, let me take USD JPY, which is currently 129.83. 129.83. 1 pip for this one now is simply 1 pip is equal to 0.01. 2 pip, 0.02. 20 pips, 0.20. 130 pips, 1.30. So if we say that USD JPY has moved 129.83. If we say number 1, number 2, number 3, number 4, 5. If we say this is USDJPY, we say that the price has increased by 29 pips. You give me the new price. This one has decreased by 15 pips. Marcel, Joe, it has increased by 350 pips. Increase, yes. Emmanuel, it has increased by 123 pips. So what is the new price of USD JPY? How can I answer? You didn't assign. Okay. Okay, now let me assign it now. So for those online, this is, I hope they can see this, 129.83. So Emeka, this is your own. Emeka, subtract 89 pips from this value. Give me the answer. Christian, subtract 53 pips and give me the answer. Who else is here? Jude or Wealthy if you're online. Wealthy if you're online, this is your own. Subtract 295 pips. So let's go. What's your own? 121. Say it again. No. You're adding 29 pips now. No, that cannot be correct. It's not correct. What did you add it to? Okay, what's 29 pips? No, 0.29. 130 point what? Good, that's it. One 30 what? 1, 2. That's it. So who is subtracting? Okay, your own question. Ikenna, your own question, add 19 pips. Silent traders. Silent traders add 233 pips. Okay? Okay, somebody said you can't see what to subtract. The value we're looking for USD JPY is 129.83. 129.83. So add or subtract whatever I gave you to that number. So minus 15 pips. 129.68. 129.68. That's correct. Joe. Okay. 131. 131 what? 0.06. That's correct. 131.06. That's correct. Who is subtracting 89 pips? We're still waiting for your answer. This person subtracting minus 53 pips. We're still waiting for your answer. Okay. So this is just a simple thing. For currency pairs with 2 decimal points, 1 pip is 0.01. Okay. 20 pip is 0.20. 350 pips is 3.50. Okay, like that. Okay, so it's actually simple. So any questions so far? I hope this is good. Yet somebody said my answer is 40.83. Or do you mean 140.83? Are you adding or subtracting? Your answer is what? 133.30. No. Okay. 133.3.3. No, no. No. No, it can't be. It can't. Okay, is this plus of which one? I added, you did plus. I wrote plus and minus there. It's still not correct. It's to be 3330. It can't be 30. 129.83. If we're adding 350 pips, what we're adding is 3.50. So what we have is 3, 3, 10, 3, 1. 133.33. Okay, so that's it for pips. So let's move to lot size. Sharp, sharp. We'll end with lot size and then we'll call it a day. We'll continue tomorrow. 128.94. Okay. 128.94. Which one are you adding? Which number are you adding? Please, Emeka, please let me know which number you're adding or subtracting so I can confirm whether your answer is correct or not. So let's move to lot size ASAP. Let's move to lot size. Okay, number 5. Number 5, it's 9 pips minus 89 pips. 129.83 minus 0.00889. Okay, yes, that's correct. Emeka, that's correct. So let's go. Lot size. Lot size. Now, there are 4 types of lot sizes in the forex market. So for those of you using the Forex Bootcamp handbook, please do well to go through it. It's much more, it's easier to understand when you're using the handbook. Okay. So let's go ahead. So lot size. Lot size is a simple measure of how to measure units on forex. I already explained to you. Number 1 is pip. Now we have lot size. Now there are 4 different types of lot size, 4 measurements of lot size. We have the standard lot size, we have the mini lot size, we have the micro lot size, we have the nano lot size. This is like your typical typical measurements where you have kilograms, milligrams. Which other grams do you have? Then we have grams. Have you? So in forex we have standard, mini, micro, and nano. The nano lot size, which is what you see here, is the lot size 0.001. Now, what that typically means is that, God, my leg is paining me. I need to sit down. What that typically means is that, let's start with nano. For every 1 pip that a currency pair moves, okay? If the price of Euro USD, if the price is 1.2000, if you're entering a trade with 0.001 lot size, although most brokers don't even offer this kind of lot size, most brokers they start from 0.01, okay? But assuming you are using a broker that offers a nano lot size, which is 0.001, if you enter a trade with this, for every pip, let's say you enter buy, you're on a buy, and the lot size you're using is 0.001. For every pip this thing moves, you make $0.01 for every pip. So if this price becomes 1.2001, how much have you made? $0.01. Okay. If the price becomes 1.2005, how much have you made? How much dollar? $0.05. Exactly. Okay. So you're already seeing that for you to make $1 with this, the market has to move how many pips? The market has to move 100 pips for you to make $1. And the average movement of the average currency pair is like 80 to 100 pips daily. So how many days will it take you to make $100? It might take you a whole year if you're using this kind of lot size. The second lot size is 0.01. So 0.01, let's say we enter a sell this time. A sell 0.01. 0.01. This simply means that every single pip is $0.1. So if the price of this reduces from one, because we're on a sell now, so the only way we can make profit is when the price is going down, correct? So if this goes from 12000 to 1.1998, how many pips did it go down? How many pips? This price reduced from this to this. How many pips? Huh? Is what? No, it cannot be 0.2 now. It's just 2 pips now. It's 2 pips. Where did I subtract from here now? What I subtracted is 0.0002. And I told you that this is what? 2 pips. Okay? So if the price has moved 2 pips, how much have we made? $0.2. So it will take 10 pips for us to make $1 if we're using this kind of lot size. Good, right? Now, let's go to mini lot size. Mini lot size, let's say we're doing by 0.1. 0.1. That means for every single pip, you're making $1. For every single pip, you're making $1. Now, another thing you need to pay attention is the fact that it must not be 0.01. It can be 0.02. It can be 0.05. You understand? This one too, it must not be 0.01. It can be 0.05. It can be 0.06. This one too, mini lot size, it must not be 0.1. It can be 0.5, 0.8. If this is 0.8, how much are we making per pip? $8 per pip. So for every single pip the market moves, you've made $8. If it moves 100 pips, how much have you made? $800. $800. Okay. Now we have the standard lot size, which is 1.0. Now, this 1.0 can also be 2.0. It can be 20.0. It can be 30.0. It can be 50.0. It can be 100. So assuming now we are using 100 lot size, that's 100 lot size. How much dollar per pip? How much dollar per pip? If we're using 100 lot size for a trade, how much are we making per pip? $1,000 per pip. So for every pip, the market moves in your favor, $1,000. But every pip it moves in the other direction. No, the higher, no. Yes, the higher the pip, yes, the bigger the risk. You understand? And the higher the lot size you're using, the higher your either you're making or you're losing. You understand? But the good thing is in Forex, you can risk one to make 100. You can risk one to make 10. You can risk one to make 5. For instance, now, let me show you this market. Now, this is Euro card, AUD card, sorry. Let's assume now that we enter a trade here. So now this is this trade now. This is where we enter this trade. We enter this trade here. Good. Good. We enter this trade. What we are risking on this trade is we are going to be losing if this market, pay attention please, if this market moves from here to this red line, we have lost. You understand? But if this market moves from here to this green line, we have won. Okay? As you can see, what we are risking is what we want to gain is 3.4 times what we are risking for this trade. So assuming we are risking $1,000, if we lose on this trade, we lose $1,000. But if we make money on this trade, we make $3,000. If it gets to this green line, this thing can be as high as you want, as far as you're patient to wait. And if your analysis takes the market to that point too, because this market can get here and come down. You understand? But the good thing is, at any point, you can take your profit if you want to. If it gets to this point, where it is currently, you can decide to take your profit. Fine. Okay? So let's now go forward and see what happens. Okay? Okay? So at this point now, we are currently losing. At this point, we are losing. We are losing at this point. Good. So at this point, we are on profit. As you can see, we're on profit. And it kept going up. So typically, if we enter this trade here and exited here, we have made 3 times what we were risking. You understand? Typically, that's how money is made in Forex. You're hoping that you're taking a risk, but that when you make it, you make more money, more than what you were risking. I know some people that risk 1:10. I don't do those kind of things. most times, most times, I do 1:2.5. If I want to be greedy, because I don't have the I don't have the patience, and I want to close my trade before the day close. So before this thing will reach here, this might take like 1 week. Sometimes it can take 1 day. It's possible. Anything can happen. Another thing you need to pay attention and know in forex that anything can happen. In forex, anything can happen. Okay, so most times 1:2.5, 1:2, done. I take my profit and I move. Okay, but typically that is how it works. So if you're depending on your lot size, that determines what you would be making per trade. Any questions there? Any questions on that end before we call it a day? We didn't cover much ground though. Oh my God, I was thinking we'll cover a lot. I was thinking that we'll cover much more than we've covered, but what are we going to do? We'll try our best tomorrow. That's the best we can do. Yes, we didn't start very early. 5:54. So, but any questions so far? Any questions so far? If you have any question, online, offline, if you have any question, please let me know. If someone say explain what you mean by 1.23 and so forth, sir. What I mean by that is that you can risk 1:2. You can risk 1 to make 2. You can risk 1 to make 3. You can risk 1 to make 5. You can risk 1 to make 10. You can risk 1 to make 20. You understand? Assuming on this particular trade, our risk was like this, something like this. This is a typical, let's say, this is even 1:26. This is a typical 1:26. If our stop loss was here and it did not hit our stop loss and it just went up straight, what we made on this trade is 26.0, which is 1:26. You understand? So the question is, do you have the patience to wait all this thing? Because one thing you also understand in forex is that your psychology is your highest enemy. You understand? Because when it's on profit, there is this fear of what if this profit now goes back and becomes loss? You understand? That pessimistic default nature of every human being, and that's how life works. It's easier to believe bad news than good news. When you hear that, this one has divorced, though, but you wouldn't hear all that time when the family was living good, when they were really a good, happy family. They will not tell you. But that one bad news, so it's easier for the human mind to believe that bad things will happen than that good things will happen. So most times when people come to forex, they don't know that they should handle that part of their aspect of their thinking. So they just come into forex and there's this default fear. And if you don't handle that default fear, you just keep making a lot of losses. You understand? Forex trading is not hard. I wish I met somebody like me when I started trading that told me that it was not hard. Because I came into forex with the mindset of it is hard. You understand? So even when I was winning, my psychology was just terrible at the time. You understand? But when you come into the mindset, you come into forex knowing fully well that this there is nothing hard here. The only hard part of forex is that part where you are fighting your emotions. But as for knowing well, okay, when it does like this, buy. When it does like this, sell. There is nothing hard here. There is nothing hard here. It's just that part where you're seeing the profit, watching it, and it's moving, and your heart is doing bing, 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 bing. For some people, their high blood pressure is is because of as the market is going up, their tension is going up. You understand? So that's just the really difficult part. As for knowing when to buy and when to sell, absolutely nothing hard here. Okay, so we'll call it a day. Let me see whether there is any question. Someone say, for instance, let's say you have $100 in your MT4. How do you place the 1:2? Well, we'll come to that tomorrow, where we talk about, when we start taking trades. I just hope we cover everything we should cover by tomorrow. But by tomorrow, we'll talk about how to place trades, okay? And I'll definitely advise you on how to do your risk management. Okay, so that's it for today. So thank you, everyone, both online, offline. Thank you for being a part of today's class. It has been an awesome time. So thank you. If you have anything to say, if you have any words, please let know on the chat. Cheers. Yes, it will be on. It will be on YouTube. Okay, so please, time for tomorrow is 3 p.m. If you don't know, time for tomorrow is 3 p.m. 3 p.m. prompt. We'll start very early tomorrow so that we can finish early because there are a lot of grounds to cover, a whole lot of grounds to cover tomorrow. So we'll try and start very, very early. Okay. So that said, um, thank you. And then before we go, what I'm teaching is actually part of a full course. There's a full course to this thing where and it's online. So if you want to join the full course, it's online. So there'll also be a link somewhere around in this video or in our trading in the Signal channel. If you want to purchase the full course, it's much more, you might understand it better than what I did here because of time. There's a lot of things I skipped because of time, but these are the basics you need to know for you to get started. Okay, but if you want to go pro, definitely, I would advise you get the course. Eh? Then we'll talk about the benefits tomorrow. Okay, so that said, thank you guys. See you guys same time tomorrow. All right, bye. Yeah, you can end the live now. We're good to go.